Good morning. It's Wednesday, February 28th, about 6 a.m. Central Time. All right, the precious metals are weaker after yesterday's supportive session. We have April gold down $6, 20.38. You got May silver down 18 cents, 22.57. May copper down 2 at 3.83. And then April platinum down 11 at 8.85. So platinum ran into that resistance point right on either side at 900. A lot of people had some sells up there. They trimmed some of those positions off at that level. I said that generally it comes into this struggle. It's like a battleground around the 900, and we pull back from here. Even a couple of people I talked to, I said, with the weakness we're seeing in other industrial metals, might not be a bad spot to take a short on. Now looking at that May silver contract, small setback. Now that was the weakest one yesterday. We saw platinum hover at 900, and then silver just kind of ran close to the 23 level, but it just failed from there, and it really had this setback as the day went on. We did see pockets of strength in the April gold contract as we saw upward momentum on crude oil, and then also we had a very strong 7-year note auction, so those treasury yields come off a little bit, helps boost that gold market, but today we're giving up some of those gains. I think it's because of the dollar strength. The dollar's back over 104. Also, you got some weakness in across the board sectors. Now, if you look at the ETF holdings on the gold, we've had 12 straight sessions of ETF liquidation. Where's that money going? Looks like Bitcoin up about 4% right now. $2,245 what it's up. Knocked on that $60,000 handle in the overnight session on that March contract. Going a little bit below it here at the moment. Now later today we're going to have a lot of data coming out here. Well, really just the GDP. We've got the second release. The expectations are for 3.3%, but I think the devil's in the details, and I think we'll come in just a smidge higher, about 3.4%, reflecting the upward revisions on government spending and also healthcare consumption. It will be offset by some inventory investment revisions, but I don't think it's enough here to take the number down. So expect a little bit hotter GDP, in my opinion. Now, later today at 11 a.m., we will have Atlanta Fed President Raphael Bostic. He is an FOMC voter. He will speak. He'll say that we've made tremendous progress, but we're just not there yet. If it continues, he'd be willing to cut some rates going on in the back half of the year, but that progress is going to continue. Then we'll also have at 11:45, Fed President John Williams, also an FOMC voter, will speak. And he'll say that at some point he thinks it'll be appropriate to pull back on the restrictive monetary policy. But that's going to be later in the year is when he'll anticipate that. So looking at other data coming out, again, that PCE data coming out later in the week. And that's really the one that's going to move that CME Fed watch tool. So we want to address that kind of before and also after that comes out. Now, as far as silver, a lot of people coming to me, if you don't have exposure, perhaps this is a decent level. We are seeing the July contract now dip below the 23 level, so you could start looking at those longer term contracts going out. So if you're going to add a second one, maybe you go out a little bit farther out on the contract. As interest rates come down in the anticipation, you'll see that cost to carry come down, and that'll help out getting those longer term positionings. I'm also liking some of the farther dated option strategies on silver. A couple clients presented that to me. And then on the crude oil market, really we're waiting for the December crude, but I think you got to get closer to that 72, 70, 68. Focus on those 100-barrel contracts, and I think you'll be able to position size yourself correctly. Remember, position sizing is one of the most important factors, and then making sure that the fundamentals that you're playing are going to continue for an extended period of time. So we anticipate over the course of the year, interest rates will be cut, dollar index will weaken, 2-year treasury yields will weaken, and gold futures should get some momentum behind it, some of the wind behind its sails. Now, on the flip side, say you were playing something like natural gas and you were expecting a cold winter, and that's the reason why you're going long natural gas. Well, guess what? It's knocking on March. Winter's over. That cold snap, whatever that was going to cause natural gas to go up, it didn't happen. So you have to look at exiting. Make sure that the fundamentals continue to carry with that market. Another market where the fundamentals quickly change on are the agricultural markets. If you were playing, something else, perhaps a problem with the harvest down in South America, well, they're harvesting record productions. The harvest it's getting near that completion, or you're playing a U.S. weather scare. They are not planning yet. So you can't play that yet. So they're starting a little bit of planning, but not enough in order to make, this delayed planning case or anything like that. So just make sure that your long-term fundamentals, they line up and they continue to go forward. If something dramatically changes, then you need to change with it. If you got any questions, I'll be on the TD Ameritrade or the Schwab Network here at about 7:15 Central. Then I'll be doing 2 spots for the CME group, one covering the metals and then one covering the energy markets here today. My entire team is down in Houston. They are at the Commodity Classic. If you're in that area, please go over and visit them. They're in booth, I think it's 7727. So Blue Line Futures. You got any questions, give me a call. Love to talk to you. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.